your weekly fix on finance and investing. This is the Korelin Economics Report.
Okay, welcome in. You got to admit, James Turk is a very, very interesting individual. I'm chatting with my friend Alan Butler. Alan has a program in Atlanta, Georgia, on a major station down there called Butler on Business. He is one of the most interesting people when you talk about financial issues around. If you can get his station when you're in the area, you really got to tune in. But he's a very, very, very interesting show. He and Jason do a great job. He also podcasts. So if you go to www.butleronbusiness.com, you can get the podcast also. Alan and I were talking earlier about some conventional situations, and he was chatting a little bit about how, in his mind, quantitative easing, QE3, has already started. I agree with him 100%. Alan, can you elaborate?
Sure. Al, first of all, whenever a central bank cannot provide direct, overt assistance, insolvent investment banks or one of the governments, there's no need to worry. These central banks can still provide indirect assistance, and that's what's taking place right now. I'm sure everyone is familiar with the dollar swap arrangement that Chairman Bernanke announced a few weeks back. Well, this recently announced backdoor bailout of European financial institutions, to me, illustrates the point. The European Central Bank, by virtue of its treaty, cannot directly bail out the insolvent governments, the ones we're calling the pigs. Meanwhile, the U.S. Federal Reserve cannot directly rescue Europe's insolvent banks. Enter these indirect bailouts, and this is how it works. Our Fed is extending unlimited lines of credit to this ECB under these so-called swap agreements. The ECB, in turn, provides dirt cheap capital to these struggling banks in Europe.
Right.
Then the banks, understanding this unspoken quid pro quo, take this dirt cheap financing to buy the high-yielding bonds of Greece, Italy, Spain, and the rest of these characters. So if you follow the money, the Fed is lending money to the Greek government, and all along the way, the insolvent European banks are making money they do not deserve to make, while we, U.S. taxpayers, holders of U.S. dollars, are losing money that we do not deserve to lose.
I would agree 1,000% on that one. Now, having said that, I think that that's only one of the ills that are facing the American public. And I have to say, I interviewed a fellow from Australia on this subject. He is a captain for Cathay Pacific Airlines. And he lived in the United States for a number of years, and he said, my observation on what's going on in your country right now, no disrespect to your government, but he said, I've got to tell you, I think the American people, for lack of better terms, are really getting bad service, I guess is a polite way to put it, as opposed to just using the word stiffed by your government. And I would agree with that. And what you're talking about, Alan's a great example.
Al, they have gotten totally off the leash. The week they announced this currency swap, the amount of swaps, i.e. loans, with the ECB was only $2.4 billion.
Right.
Now, for the week ending December 14th, it had already jumped up to $54 billion. Now, dating back to January 18th, it's at $103 billion. If you look at the monetary inflation that they're creating right now, I mean, it is a staggering sum. They will march this thing, my guess would be upwards of $1 trillion. And meanwhile, our news media, our press, particularly our financial press, they're not reporting this story. And to me, this is one of the most significant things happening really behind our backs at the moment.
Well,
but you can follow the amount of what they're doing by going to the Fed's Cleveland Bank and looking at their website. I mean, and if you look at it, this backdoor QE operation, they're barely just kicking the can down the road for a little bit, but this new Fed operation is inflationary, and it will become more inflationary as the volume of currency swaps on the Fed's balance sheet continues to grow And for a fellow who's proud of mining stocks, as you should be, if you go to the Cleveland Fed's website and you look at the size of these credit swaps, the rate at which they're going, it'll make you want to listen to Big Al and know which mining stocks to buy.
A couple of other things that I think are worth just bringing up in passing are, number one, the situation in California, for example. Their budget shortfall is so great down there that they, it looks like, are going to have to float a $3 billion bond on Wall Street because their tax revenues have fallen so far behind. You know, there's another nail in the coffin. And here's another one, as we were talking about off the air. Bank of America. Could that perhaps be the next Lehman? I don't know. What does Alan Butler think?
I think at this point that the Federal Reserve is willing to print up any amount of money, to lend any amount of money, to do whatever is necessary to keep these insolvent banks insolvent. The U.S. taxpayer, the value of a dollar be damned. I don't know that they will allow it to fail. They may inflate us into oblivion, keeping them afloat.
Well, now, wait a minute. Well, you're contradicting the President of the United States, who said in his State of the Union address, no more bailouts. Huh?
I have quite a few omissions from Obama's State of the Union address. He and I think we're looking at two different unions, but
right.
But he's big on these bailouts.
Sure he is. Sure he is.
You know, now you mentioned California. They've had quite the shortfall. They had their revenues are $2.6 billion less than they were projecting, while their spending, coincidentally, is $2.6 billion more than they were planning on. Yeah. I would say that's quite the miss.
It's one of the things that keeps me so bullish, Alan, on the mining sector and on precious metals. I mean, what people thought were strong fundamental reasons to invest in the conventional stock market and the U.S. dollar in the past, they're really, really almost non-existent right now. And unfortunately, I don't see that changing.
Well, I agree with you wholeheartedly, Al. You know, I've got a list of things that Obama failed to bring up in his State of the Union, but back to those banks. These politically connected banks continue to grow at the expense of the rest of us. I mean, right. It was Obama that reconfirmed Ben Bernanke, the same Ben Bernanke that missed the housing bubble,
right.
The same Ben Bernanke that missed the fact that we were entering into a recession.
Right.
He appointed him for another 4 years. We've seen 389 smaller banks with a total of $297 billion in assets have failed under Obama. The big banks and their derivatives are up dramatically. Obama is a member of that big banking institution. He was bought and paid for by those banks, in my opinion.
Thank God we live in a country where freedom of speech is still valid. Because if it weren't, you couldn't do your great show, and I couldn't do mine. Alan, always a pleasure. You guys stick around. Big Al's going to be right back.
To find out more about today's guests, visit us on the web at www.kereport.com. You're listening to the Korelin Economics Report. We'll be back in a moment.